people were saying no one wants to be more capital efficient or do anything programmable on Bitcoin. And whenever I hear a black and white approach to things, I'm like, oh, my alarm bell goes off. Obviously, that's not right. So it's like, okay, if 10% of Bitcoin holders want capital efficiency or programmability, you have an asset that's larger than Ethereum and or Solana.
Hello and welcome to Markets Daily, hosted by me, Jen Sanasi. On this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So whether you're actively trading or simply fascinated by the volatility that is the crypto markets, this show is your compass to understanding what's happened, where we are, and where we're going. On today's show, we are joined by Portal Ventures founder and general partner, Evan Fisher. Evan, welcome to the show.
Hey, Jen. Great to be here. Thanks for having me.
Of course, thank you for being here. It has been quite an exciting and turbulent end to the year. Talk to me about what you're watching as we head to the end of 2024.
I think what's interesting here is we're on the 4-year cycle timing. And it's interesting that we're here again because the only way that happens is when people think that the 4-year cycle is not going to repeat again, which was the talk over the summer or last year. And so for us, we're looking at a few things. The first is we're looking at the inflows to Bitcoin. We're looking at how that creates a wealth effect in crypto, what that does to the buying of longer tail assets. From that, we're trying to understand, okay, who are these buyers? If you look at past crypto cycles, buyers were typically people that were, making their money in Bitcoin. It doubled, tripled, quadrupled their money, and then they went further out on the risk curve. And they did that in a way that was more narrative driven. There's been a lot of talk about institutions coming to crypto. And so we're staying close and saying, okay, does that mean that you're going to really see institutional investors buying this longer tail of assets? Are you going to see people underwrite things for their cash flow or their commodity value? Or will it continue to be narrative driven? And that we will only really be able to tell once we see Bitcoin really continue climbing and see other blue chips break their all-time highs, as would happen in that 4-year cycle.
What's your thesis?
We expect that crypto over some period of the next decade will turn more fundamentally driven. What does that mean? That's a story that's still being written. Like in 2021, I wrote an article for Bankless about the MakerDAO DCF, for instance. And that pretty much every 6 to 12 months has come back into the meta. And there's been talk of, okay, can you underwrite these assets for your cash flow? On the flip side, though, a lot of cryptocurrencies actually resemble commodities. And I think what we're going to see is some combination of some assets resemble equity-like businesses, some resemble commodities. And so for us, we underwrite every asset based off that. Like for every investment we're making, we're asking the question of, if this goes right, what does it look like? But also, is this going to be valuable? Because a lot of users just have to own the asset to interact with it. You could look at BNB as an example there. Like you could run a DCF on BNB, but that's not what actually drives the price action. It's more so people need it because it gives them discounts. And so it resembles more so a commodity. So you can underwrite it like that, or you can underwrite something and say, actually, it is going to look like a Maker or an Ethereum with burn. And then we need to understand the profit potential. But that's a story that's going to play out over the next decade. And so I think when we look to this cycle, we position ourselves by saying, we just want to win regardless of what happens. And we can do that with how we invest, where we invest, how we construct a portfolio.
Let's talk about your recent news. You raised a massive oversubscribed pre-seed crypto fund at $75 million. Talk to me about going out and raising. It seems to me like an interesting time to be putting this fund together. Talk to me a little bit about the interest and the participants in the fund.
For sure. Something that's interesting about raising these funds that I think is hard to grasp from the outside is they can take a long time. And so we started raising in Q1 of this year. And so it was a fast raise in the grand scheme of things, but it was a very different time when we went out to market. Bitcoin was down 45% from its all-time highs. And so there's some irony in doing the press as Bitcoin is breaking its all-time highs, because that's actually not when we did the hard work of raising it. In terms of what it looks like for us, I started Portal after being at Insight Partners for 3 years. Insight is a global venture capital fund. They manage about 90 billion global in total. And they've been more under the radar than the flashy guys like the Andreessens of the world. But so part of the LP base is managing directors from Insight partners and founders across the Insight portfolio. So 2 decacorn founders there, for instance. We then have some traditional finance folks, like Henry Kravis, and then we also have very crypto native folks. So that could be the Kyle Samanis of the world, the Chris Dixons of the world, et cetera. I think when we look at our LP base, though, what's interesting is it's probably 50-50 between investors that want crypto exposure, and we're really their only crypto exposure. And then the other half is investors that have crypto exposure, and then they want to work with us because we end up being the first check-in. And so we end up being upstream of a lot of the really blue chip assets that form here. And that's just a really attractive place to sit from a risk return profile, but also from like a discovering new trends perspective.
Talk to me a little bit about your investment thesis. I mean, this is a pre-seed fund. What kind of projects are you looking at? What, from your research and from your perspective, is going to drive the narrative in 2025?
Yeah, the thing that really kind of covers our thesis first and foremost is the stage at which we're investing, which is to say almost everything we do is first check-in investing with a thesis-driven approach. To give a sense, we've only done, of the deals that we've done this year, only 1 or 2 have had a white paper and a deck. So we're really coming in potentially just the ideation stage. We've been held up on investments in the past because the company was not formed yet. Like we told someone we wanted to invest and the company was not formed. So the first thing is it's very, very early stage. The second thing is we only lead and we do it with high conviction, which is to say we're only backing 1 player in each category. And that's really important to us because we want to be all in. Like building a company is an emotional roller coaster. And when we back 1 per category, we're along for that journey. Like we feel the ups, we feel the downs. After that though, it's theses that drive a lot of what we do. And so for that, it means we're coming in and only looking at assets and companies in categories where we've really done the homework and we have a unique perspective. So we don't look at that many different categories at any given time. What it does though, is it means like when we're talking to a founder, we're a thought partner. And that's what founders really want. Like they want someone that understands their product deeply, can be trusted, and then can help make some really material impacts on it over the course. And so right now there are, a handful of theses that we're running at. I can speak to 2. One is something we call latent capital markets, which is kind of our spin on RWA, but it's really just asset classes that cannot be served in the traditional financial system because the cost to serve it is just way too high. And there, we led around into a business called Skytrade and recently into a business called Uranium Digital. The former is tokenizing air rights, which is a multi-trillion-dollar asset class that really doesn't have liquidity or efficient markets because it's just so complicated to actually manage these, upload them, facilitate buyer-seller interactions. And then the second one being uranium. Uranium doesn't have an efficient spot price today. And so there's a uranium trust, but you can't physically settle. It's like there are all these complexities around how do you manage the audit trail for uranium? How do you physically settle it? How do you make a market? So this is the first big bucket that we've spent a lot of time in. The second, which is a more than crypto native bucket, would be ideas and businesses focused on novel distribution. So there we were the first check-in to Open Social, which is the largest SocialFi platform today. They're at about 500,000 daily active users. They grew past Farcaster in the course of a few months. And there the insight for us was really about distribution. So it was about a business model that we spent a lot of time thinking about. And the founders there, they've built Chinese/APAC internet businesses before. They understand how to get products into the hands of users, how to iterate pretty quickly. And we think that's going to dictate a lot of what makes crypto successful going forward. It's just distribution.
Now, you're writing checks before a white paper at the ideation phase. It sounds to me like you really are writing these checks based on the founder and their ability to bring this idea to life in collaboration with your team. Is that a correct assumption to make?
That's right. It's both founder and market driven. But the founder really matters. And we really like founders that are not just technical, but also really have a sense for what does it take to turn this into a real business. We sometimes call that being commercial, but it's really just like they can take an idea, to a real product at scale with users.
Yeah, that makes a ton of sense. Now, you just unpacked a few different narratives that have come out of your research. And I know that you've built a little bit of a reputation on um, eh, being able to predict what's going to happen in the next 6 to 12 months based on your research. If you were to pick one of those narratives as one of the driving factors in this bull market as we head into 2025, which one would you pick?
I think that Bitcoin is actually going to come back. We were early to Bitcoin. We started doing our work and are investing in that summer of 2023. The thesis was simple. People were saying no one wants to be more capital efficient or do anything programmable on Bitcoin. And whenever I hear a black and white approach to things, I'm like, oh, my alarm bell goes off. Obviously, that's not right. So it's like, okay, if 10% of Bitcoin holders want capital efficiency or programmability, you have an asset that's larger than Ethereum and or Solana. And so something that we're most excited about is Arch, which is smart contracts natively on Bitcoin L1. And we looked at that and we're like, wow, there is pent up demand for using Bitcoin that has really still never been met. And what's so interesting is in crypto, people are often saying, okay, we have all these products, these businesses and these protocols, but no one wants to use that. They're like, how do we build demand? This is one of the few spaces we found where there's actually so much demand for these products, but the demand hasn't been met. And so I think that Bitcoin programmability, Bitcoin program like capital efficiency, and really just like this Bitcoin renaissance will come back in a very meaningful and scalable way this cycle.
I think about the last bull cycle and there was VC money just kind of flowing everywhere. It feels like the landscape is a little different, and maybe that's a result of the industry getting a little bit more mature. But if you look to 2025 and you look at the VC landscape, how do you think it's going to compare to what we saw in the last bull cycle?
Yeah, I think it's going to look pretty similar.
Yeah.
Like the markets just always work this way. In times of euphoria, everyone gets excited. And in times of despair, everyone gets scared. And the job of an investor and what we try to really do is be the inverse of that. Or not purposefully be the inverse. At least we try to think from first principles and say, okay, if there's greed in the markets, is that greed justified or should we be fearful? And when I look at it, it's just throughout all capital markets in history, like let alone crypto, look at stocks, look at tech assets. It just eventually turns into this game of, okay, there's euphoria and people end up making irrational decisions. A quote that I love on this, I don't remember the exact line for line, but it's hard for an individual to go mad, but it's easy for a crowd to go mad. And so then we ask the question of, with that knowledge, what do we do? And that's where we've historically just tried to be pretty low key. Like by being just really at home doing the work, not being super public, we've found that we can avoid a lot of that. We were very aggressive investing in 2023. We really didn't invest anything in 2022. And so that's our plan going forward, to try to just keep a level head with the madness.
Evan, thank you very much for joining today. Congratulations on raising this fund. I look forward to seeing the projects that you support with it. And thank you for joining the show. It was a pleasure talking to you.
Of course. Thanks for having me, Jen.
And thank you to everyone who watches and listens to Markets Daily. If you enjoy the show, subscribe to the CoinDesk Podcast Network. That is available on all podcast platforms. We are on YouTube if you prefer to watch. Subscribe to our YouTube channel. Give us a thumbs up. It was a pleasure bringing the show to you today, and we'll see you tomorrow.